You're about to find out the key levels for Charles Schwab's ticker SCHW. Now, to get straight into it, we are up 12.5% today. Again, this is off their earnings release. Now, I want to quickly cover this, just state the key things from this earnings. So firstly, what were they expected to get? So their earnings per share was estimated to be 71 cents, but that is down from 26.8% year on year. So the estimates were already a massive decrease from the previous years. And then also their revenue was estimated at 4.61 billion. And again, that's down 9.4% year on year. So the expectations are coming in a lot lower than last year. But when they did release their earnings, they did come out at 75 cents. So beating the estimates of 71 cents earnings per share, and the revenue came in at 4.66 billion, beating the estimates of 4.62 billion. So again, beat estimates, but overall they are still down massively year on year. So I wanted to point that out, but now to get into the key levels. Again, you can see we were at about $59 yesterday. We gapped, and again, we've broken straight through this deviational level and basically almost hit our first deviation on the 1 year, which is at $67.50. So right now, that would be my main focus on this stock. I wouldn't be surprised if we see a continuation and a push to $75.50. That's what I'm paying attention to as a resistance. Now, if we can break that level and continue higher, then I'm paying attention to our next resistance, which would be at $72.75. And if we broke that, we basically have a final level for the time being around $79, which would, if you go back about 3 months, take us back to around that 3-month level. Now, one thing I do want to note on Charles Schwab's is if you zoom out and look at the bigger picture. So if we zoom out on this, again, this is a 6-month chart. And this is a 1-year chart. You can see on both of these, we are trending down. So to me, I don't want to be really taking too many longs when we're in overbought territory. And how do you justify overbought territory? It's usually normally using these first deviations. So I would really never look to buy this stock, whether that's from an investment or a trade long above 67.50, because that's when you're coming into very overbought territory. So again, if we're downtrending on the 6 month, we're downtrending on the 1 year, I'd rather be playing those trends than fighting against it, trying to take us to those highs again. So to me, I'm not looking to get long over 67.50. To me, above that, everything is a short bias level. So $72, $75, $79, I'm looking more to be short bias in these. And again, if I was holding the stock long, these then could be used as targets. But that's what I'm looking at on Charles Schwab's. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.